Hi, welcome back to Hedge Fund Manager. I'm Karl-Mikael Siding. So let's continue with the technical analysis part of this deep dive into FIX, or comfort systems as they are called. I've brought up a chart here that is 5 years. It shows us 5 years of history for comfort systems, and as you can see here, it's increased by a lot over these 5 years. The question here then is this a good time to try to catch this train, or has it already left the station and we are hopelessly left behind? From the first 5-year chart here, you can see they had a really good exponential trend over 5 years, and then this spring, the tariff hiccup, which made it fall by almost 50% from the absolute intraday peak to the intraday bottom. But from there, it's recovered pretty nicely, actually rising by more than 50% in a very short period of time. Makes you regret not finding it just a couple of months ago and going through the numbers to see whether it was all cheap as well, apart from temporarily depressed in terms of the share price. So that's a really strong long-term trend. If we zoom in a bit on the chart and only investigate the last, let's say, 10 to 12 months or so, you see the euphoric peak here at about $550 per share, just this spring, just after the inauguration of President Trump, and then the crash downward as the tariff wars took hold, all the way down here to $280 per share, so just about a perfect minus 50%. Before, after that, increasing by almost 60%. So is this a good technical setup or not? I would say it's quite a bit better than average setup. Apparently, we have a company that the market is loving and has been loving for at least 5 years, and even though it went below the blue line here, its 200-day moving average. It has, after that, recovered and recaptured the area above the 200-day moving average. If we had caught the stock a little bit earlier, for example, after trying and failing to recapture the 200-day here, I mean, this miss here, that is usually quite a negative signal. It's a confirmation of the negative trend actually being a negative trend. So once you go down below the 200-day and fail to go back above, and especially if it's this close, and even the second time here where it tried to get back up there and didn't even get all the way up to the 200-day, and then going down again. Like if we were to have looked at this chart right here in April, I would have said that this is quite the negative setup technically, and would have said that this is definitely a headwind worth taking into account and being really careful and cautious about investing in it. This would have required that the fundamentals were really good, or that we should have waited for confirmation of a positive trend before buying. In any case, if we had abstained from investing at this point here, we would definitely have entered it again and wanted to buy it somewhere around here, because right here we're rather in a positive TA territory, having just a short period below the 200-day, then recapturing it, and if it's a cheap company, then this is a good technical setup. So right now we are in pretty good TA territory. Good to know, but again, as always, it's the fundamentals that matter, and the TA part It's just a slight headwind or tailwind. And right now we have a positive tailwind. Here is a complementary chart which I brought up in Koifin's comparison graph tool, where I entered all the similar companies, the engineering peers, to see how they have performed over the last few years. And the blue line at the top here, it's Comfort Systems, FIX, the one we are checking up on. And as you can tell, it kind of keeps pulling away from all the others, except maybe this purple one, which happens to be MCore, the close peer that we discovered in the bubble chart. And then we have, for example, the big one, maybe you remember it also from the bubble chart, Power Systems. It's more middle of the pack here, not bad, plus 150% over this period. So what you can say is that this seems to be a really good part of the economy and the markets, being into high quality engineering, and the higher the quality, the more consistent your performance seems to be. This is just to show that there are many ways to skin this cat, many ways to check up on trends and technical analysis, to see if the company has a good momentum or trend, if it's better or worse than other companies in the same sector, the same part of the economy. And again, FIX has performed the best, but also has probably the best key ratios, as we saw in the bubble chart. Then moving over to a market-wide technical analysis, we can see here that the S&P 500 also crashed below its 200-day, made a fake recapture, then fell really heavily. But now it's actually up above again, partly because the tariff wars seems to be abating. There was a very recent breakthrough where the US backed off a bit, and now we have a slightly better situation between not least China and the US in terms of the tariffs war. That could explain fundamentally why the technicals look good, but right here, right now, we actually only care about the technicals, and being above the 200-day, that's at least a slight tailwind also from the markets, although we're still very close to the 200-day, so it doesn't take much to crash down below. Another thing worth pointing out here is that looking at a 3-year chart for FIX, you can see here it did fall below its 200-day, then recaptured it on the way back, on the long way back up. You can see it repeatedly makes fake breakouts downward through the 200-day. So being below the 200-day is not something that you should give a huge weight for FIX, because it keeps breaking the 200-day and then get it back up above again. You can see here that it went from like 80 to 560 at its peak, despite breaking the 200-day like tens of times on the way there, not least here, after almost and then actually doubling from a period of staying below the 200-day. So do not take the TA too seriously. It's just a way of checking that you're not doing something really unnecessary, hasty. And anyway, as it is now, we actually have a tailwind from TA for FIX, so we don't even have to consider the problem with being below the line. But actually, even being below the line here, as we were earlier, we probably should have concluded that that doesn't matter for FIX, because they keep being below and then breaking back up above again. So this looks really good actually for FIX from TA perspective.